All right, y'all. So I appreciate y'all for hopping on this session today. So today we're going to go over three concepts. All right. So number one, we're going to go over trend lines. And we're also going to go over support and resistance. So trend line, support, and resistance, these are all technical tools. This is 5% of trading. So concept that we can take away from this session, one concept is trading is 95% psychology and 5% skill set. So learning these concepts such as trend lines, support, and resistance, that's only 5% of trading. This can help you to navigate through the market conditions, but this should not totally be leaned upon, right? The biggest thing that's going to shift your consistency in your trading career is focusing on that 95%, right? Focus on that woman in the mirror, you versus you, right? Focus on, going within yourself and learning yourself, right? Having God all in the mix. With this whole journey, he's showing you more and revealing more about yourself. So when you focus on that and you work on that 24/7, become at least 1% better every day, right? That's 365% in a whole year. That's quantum leaps. So when we focus on that, right, focus on growing our minds, focus on creating healthier habits, getting more rooted, in the word and spiritually. When we focus on those things, then that's where we're going to really see that consistency build in your trading career. All right. So that's a whole foreground for it. Again, trend lines, 5%, support resistance, 5%. That's a skill set. So what is a trend line? So a trend line is a line on a graph showing the general direction that a group of points seems to follow. This technical tool smooths out price data, but should never solely be relied upon. So in order for a trend line to be valid, and y'all can write this down, in order for a trend line to be valid, it has to connect with 2 points. It has to. So this is point A in this example. This is point A, and this is point B. So point A and point A connected with point B. And that's what makes this example valid. And also, let's rewind a little bit. You have two trends in the market conditions. You have a uptrend, and you also had a downtrend. And yesterday, y'all went over market structure, right?
Yes.
Okay. So, in the uptrend, you have higher highs, higher lows, right? Hold on.
Mhm.
Let me ask y'all this real quick. So, what are the two structures in the uptrend? The 2 points in structure in the uptrend?
Higher highs and
High
higher
and low
lows.
lows.
Okay, higher highs and higher lows. Now, in the downtrend, what are the 2 points in structure in the downtrend?
Lower lows and lower highs.
Exactly. Okay, perfect. So, in the uptrend, that's where you're going to see those higher highs and higher lows. Right here, this was a higher low point. This is where you could be looking to buy from. Once price create a higher high point, if you're any buys, this is where you could take profits. Now, when price came back down and created a higher low point, right, a new one, this is where you could connect your trend line. All right. Now, the whole concept of utilizing the trend line or navigating using the trend line is every time price comes back to this line, price rejects or sellers reject from this level, and we see price continue to go up. So the same thing in the downtrend, you have your lower highs and you have your lower lows. Concept is when price come back to this level, this is where we could be looking for sellers to enter the markets to push price back down. So this was point A, and this was point B. All right. And every time price came to this level, boom, went back down. So to show an example of what a trend line, how we could apply it, let's go to AU real quick. All right, let's see. Let's see. So what type of trend is this right here in this blue box?
Looks like a downtrend.
That's a downtrend. Now, in terms of,
Oh, in that box. I was
yeah,
looking over to the right where it's light and blue.
oh, yeah, right here, this whole box.
Okay.
So yeah, that's a downtrend. So this point right here, y'all see this yellow box?
Mm-hmm.
So that yellow box, that is a higher high, right? Because um previously it was in an uptrend, prices creating higher highs and higher lows.
Mm-hmm.
So this was a higher high point. Now, this is a lower low point,
Mm-hmm.
right? Because price broke beyond this point right here. Okay. So based off this point, what would this be considered?
Uh-huh.
A higher low,
A lower high.
lower high.
A
Okay.
lower high. Okay.
And what would this be considered?
A lower
higher.
low.
A lower low. So you had a higher high, you had a lower low. You had a lower high because this high was lower than this low right here, right?
Mm.
All right.
Mm-hmm.
Then we drop down again. This low right here, this would be considered a lower low because this low was lower than this low. So looking for example of a trend line, let's see. So this will be point A. This will be point B. All right, y'all see that?
Mm-hmm.
So through this whole range, we saw price come back to this trend line, created an impulse to the upside. We came back down to this trend line, right? Then what happened right there?
It dropped. It went low.
It dropped, came back to this trend line, and we see
Mm-hmm.
it bounce back up off of this trend.
Mm-hmm.
So then we created a new high, right? Then we came right back down. We dropped again, respected that trend line. Then we continue to push higher. So that's the whole concept of how we could, in terms of this uptrend right here, this uptrend structure, this is how we could have taken advantage of this move. Every time it came back down to this trend line, we could anticipate, right? Because everything is based off of probabilities. What is the probability of price coming back to this point? And then buyers coming back into the market to push price back up. That's the only thing that we're basing our analysis off of. When we understand who the movers and shakers of the markets are, we'll understand that it is the banks, the corporations, and the hedge funds. They are the movers and shakers. They are the ones who, every time price come back to this level, we see price go back up, right? Every time it came back to this level, we saw price go back up. It first was established here. And then once we came back to this level and we saw price go back up, that was confirmation that this level was valid.
Mm.
So in the future, once price came back to this point, we could anticipate buyers to enter back into the markets. In the concept we can take away from the session today, in order for us to understand what potentially could happen in the future, we first have to understand what happened in the past. So in the past, price came to this point, established that level. Price came back to this point, validated that level. So anytime in the future, price come back to this point, that is an area where we could be looking for buy opportunities.
Okay, that's good.
Until it gives us a reason not to trust that area anymore. Right? Because if we stretch this out, right here, it touched that level, right? It attempted to go back up. It did go back up. However, we saw price break that level. It's not supposed to do that.
Mm.
What we were anticipating it to do was respect that level and continue to push up. That's what we were anticipating, but it didn't do that, right? So anytime we see this, anytime we see it break beyond this level,
Mhm.
that's what make it invalid.
You said that's where you make it what? Say that again?
Invalid.
Invalid, okay.
Anything outside of this range is invalid. Then that's
Okay.
why I marked it red. Anything above this trend line, it is valid.
Okay.
But the moment it break below this trend line, it becomes invalid in terms of buys. All right, that makes sense to everybody?
Mm-hmm.
All right, perfect.
When you say below the trend line, so I'm looking at this blue line. I know that's the trend line.
Mm-hmm.
But what do you mean below? You mean like when it's touching it?
Anything, so you see right here, this,
It's going below that line.
Oh, I'm over here. I zoomed in, so I'm looking at the wrong side because your screen was so
That's what I
small.
was
I zoomed in.
doing.
let's do it like
Looking at
that.
a different part this whole time. Okay. Got it. Okay. This makes more sense now. I'm like, I don't see nothing below that line. I'm thinking I'm losing it.
And I see, because it's blue and the background of this part is blue.
Mm-hmm.
Yeah, so that probably, it does throw it off. Let me make this black.
Okay, got it. So anything below makes it invalid. Makes more sense now. Got it. Thank you.
No problem. Let's make this black. That look better, y'all?
Yeah. So anytime it goes past that line, it's invalid. And
Yep,
to be able to see what the market is before you start buying, you want to go back to the past to see how it's trending before you make a move.
exactly.
Okay.
Yep. So this was an O level. This was an O level. So once anytime price came back to this level,
And I have a question regarding the levels and all of that as well.
mm-hmm.
So I'm looking at a bunch of squiggly lines. how do you know? I see you have circles around it, but how do you know where the entry point is? Because they're all, you have the lows, you have the highs. How do you know where to start when you're looking at the graph?
So in terms of entries and into the markets, we would
Mhm.
base that off of the lower time frames, like the 15,
Okay.
the 15 and the 5 minute time frame.
Oh, okay.
So the lower the time frame we go, the more data or details we're going to see.
Nice. Okay.
Now, in terms of direction of the markets, we always want to scale out. We want to start off on the higher time frames, like the weekly, the daily, the 4 hour, the 1 hour. That's what's going to give us the direction,
Okay.
right? If y'all remember when before we even got into this, I scale all the way out to the weekly time frame, and I asked y'all, what type of trend are we in? Y'all remember that this blue area?
Mm-hmm.
Mm-hmm.
So that was we identified that as a downtrend, right?
Mm-hmm.
So on the higher time frames would be considered in a downtrend. However, when we scale into, let's say, the 1 hour time frame,
It looks different.
exactly, you see more data.
Mm-hmm.
So in this area of the markets, we were in an uptrend. However, in the future, price created this price action here. Now we're back in a downtrend. And how we got back into a downtrend is when this trend line was broken, right here.
Mm-hmm.
When it went below this line. That makes sense, y'all?
Yeah.
Mm-hmm.
Perfect. All right. So yeah, that's an example in terms of an uptrend. Uptrend. Now let's find something for a downtrend. Let's see. So we identified this as a downtrend, right?
Mm-hmm.
All right, so we can do this like this. All right, this is point A, point B. So this area right here, this is point A. This is what established that level. Price went down. Point B, this is what validated that level. All right, that's what validated that level. All right, anytime price came back to this level, we saw it push back down. Push back down. Boom. Boom. And to see it a little bit more clear on candles, look at that. Every time it came to that level, respected it. That's where we could have been looking for sales. Every time price came back to that level. All right. What happened when it came back here? It didn't even make it to that level.
Mm-mm.
Because sellers' momentum was so strong from that level. Until yeah, it just never broke that level. It just never broke it.
And so you're saying at that level, we should have been looking to sell?
Yep.
Okay.
Like that level was so strong. From this point, from 0.66149, that level was pretty strong. And from this concept, okay, we finna transition. That made sense to y'all, trend lines?
Mm-hmm.
In terms on the seller side?
Mm-hmm.
All right, now let's transition. So support and resistance. Support and resistance represents key junctures where the forces of supply and demand meet. In the financial markets, prices are driven by excessive supply, sellers, and demand, buyers. These terms are used interchangeably throughout the course. So example, this will be considered a level of resistance. Every time price came to this level, it forced sellers, right? Supply. Hold up, where is that? So yeah, it forced resistance to price levels at which seller supply is thought to be strong enough to prevent buyers from rising any further. So every time buyers attempted to rise beyond this level of resistance, it couldn't rise any further. It couldn't rise above this level here. It attempted to, right? Right here, right here, all right here. But it never continued to push higher. If it did, it would have did something like that. Would it continue to see price push higher? That makes sense?
Yes.
Well, we saw the complete opposite. We saw price continue to push down, push down, push down. Every time buyers came to this level, this price point, 0.66143. Sellers prevented buyers to rise any further. Sellers, why are sellers? Anytime you see price going down, that means that sellers are in the market. These bars are called candlesticks. So this is just data to show that sellers were in the market. The black, those are buyers. That's just data to show that buyers are in the market. So every time buyers, right? Every time it came to this point, we saw white bars forming, which represent sellers. White bars forming down every time. Every time it came to this point, we saw price go down. So that represents supply, sellers, preventing buyers to rise any further in the market. Every time it came to this point and we saw, because previously we saw price going up. And then after that, once it came to this point, we saw price what?
Go down.
Down. Every time it came to this point, went back down. Came back to this point, went back down. So that represents sellers in the markets. Anytime we see that.
So I guess where I'm confused, I have one clarification is, I thought when there's a lower, I think I just answered my question, because I was trying to see when do we buy? That's when it's a lower high, lower low, that's when we buy.
So from lower high points, you would sell. If you had a lower low point, you could buy, but that doesn't mean that is the overall.
Okay, be all.
Yeah, right. You're gonna
Okay.
catch the most of that move from lower high points. Because if the market is creating lower lows, and lower highs, then that means our trend is a downtrend. So in a downtrend, we want to be selling more than we would be buying. So we're at a lower low point and we were buying from that lower low point. Hey, you better make sure you got a pretty solid exit plan. Because at any moment in time, price could easily turn back around and we would see price going back down.
Okay.
Back into its trend. In this game, the trend is your friend. Once you find the trend, it's your friend. Stick to it till you have no reason to stick with it anymore.
Okay.
And another concept we can take away from this session, as long in a downtrend, right? As long as our levels of resistance are being maintained, meaning we never see price break above, right? In this case, right, in this example, as long as it doesn't do this, right?
Mm-hmm.
As long as it doesn't close beyond this line, we're still good to look for sales. As long as it stay below this level.
So when it starts to go above that level, that's when we know it's about to switch and then we turn into buyers again.
Exactly. You got it.
Okay.
You got it. Look, right here. When price broke above this level of resistance,
Mm-hmm.
right? Because I basically just stretched it out. When it broke above this level,
Mm-hmm. That's when you want to buy.
yep. Look,
Okay.
buy. Now, this was our example for our trend line.
Mm-hmm.
Yeah. So it's going back into that direction, but we still want to keep in mind what our higher time frames are showing us. Every time frame is different. because once this level was broken, which was our last lower high point, now this is our last higher low point on a daily time frame. The higher the time frame you go, the stronger that level becomes. Yeah, this is a lot going on right now. Hold on, let me clear this up.
So a lot of this is pretty much like a game, and you're looking at the trends to determine how you will move in the market.
Yep. Are we going to see when price come back to this level? Is it going to bounce off that level and continue to go up? Or is it going to break this level? This is a level of support right here.
So how do you look at because it seemed like you just put lines there. How do you determine that is the level, like right there? Because it's originally starting off as just a graph, but then you put in lines there.
Okay, let me show you.
Mm-hmm.
So, do y'all live in a house or apartment?
A house.
All right, so under your house,
Foundation.
what is maintaining that foundation? Your pillars under your house.
Mm-hmm.
That is what is maintaining it. If you went under your house right now, right, and you knock down those pillars under that foundation, what's going to happen to your home?
It collapsed.
It collapsed. So in an uptrend, right,
Mm-hmm.
even in the downtrend, we can use the same scenario.
Mm-hmm.
In any trend, right, in an uptrend or a downtrend, your pillars, in the uptrend, your pillars are your higher low points.
Okay.
It is your floor.
Mm-hmm.
In a downtrend, your pillars are your lower high points. So the way that we're able to identify, okay, where's my last higher low point and where's my last, or what's my last lower high point? What is my floor and what is my ceiling?
Okay.
The way that we're able to identify that is, so you see buyers, right? The buyers are black.
Mm-hmm.
The sellers are white.
Mm-hmm.
The moment that we see this black come in, that shows that buyers came back into the market. So whenever buyers come back into the market, we see sellers and then buyers, that represents support.
Country, that makes sense.
The moment that we see buyers and sellers, right, that represents resistance. That makes sense?
Yeah.
I'm gonna say that one more time for the people in the back. Anytime that we see sellers, this white bar, all right, let's do it like this. Anytime we see a black bar followed by a white bar, that represents resistance or your ceiling. Anytime we see a white bar and then we see a black bar, that represents support. So all we are looking to happen, right, is price going to be able to either break this level of support and continue down, or is buyers going to be able to break this level of resistance or ceiling and continue to push higher?
Nice.
So are we more so looking at, not necessarily looking at the vertical direction, but the horizontal colors, like black, white, when it comes to the support and resistance?
Yes, ma'am. You want to,
Okay.
you
Okay.
definitely want to pay attention to that.
Okay.
Because
Got it.
again, this represents the data.
Mm-hmm.
right? This is called price action. All these bars or what we call, technically speaking, candlesticks,
Mhm.
that represents the data of buyers that came into the market during that specific point in time.
Mm-hmm.
So every candle you see D, every candle that is black, that represents one day.
Mm.
So this is one day that buyers dominated the markets. This is the next day we saw buyers dominate. Second day, buyers dominated. Next day, buyers dominated. Next day, buyers dominated. Same thing. They dominated. Now, when we came back to this point, and this goes back into our concept, our first concept, right? In order for us to understand what potentially can happen in the future,
Mhm.
right here, in order for us to understand what can happen potentially here, we first got to understand this. Guess what that represents?
Hmm?
What does this area right here represent? If we see black and white, what does that represent?
Resistance.
Resistance.
Mm-hmm.
Exactly. So guess what potentially can happen once we come back to this point?
Downtrend.
Sellers could come back into the markets
Mm.
to push price back down. And what happened? What's that white?
Yeah.
Resistance.
Resistance.
That shows resistance. Y'all got it. That shows sellers into the market once we tested out this level of resistance again.
Nice. Okay.
It's like a basketball. Price hits the floor,
Mhm.
right? And then price hit the ceiling. It's gonna bounce, come back up here, bounce. Come back down here, create a level, it bounced. From that level, price was able to break that ceiling. Boom. So what we could see happen next, this was our last ceiling, right?
Mhm.
So price could easily come back down to this level, to this ceiling. And then what do we see next?
It goes back up.
That ceiling now turned to a floor. Y'all see that?
You said that
Mhm.
ceiling now turned into what?
The floor, level
A
of
floor.
support. Because why? You got this candle, this white candle shows sellers, right? Then this black candle that represents buyers.
Mhm.
Mm.
Anytime I say you see this formation right after, what does that represent?
Resistance. No,
Resistance.
Support.
support. Yeah.
Oh yeah, white, black equals support. Okay.
Right. Black, white represents what?
Resistance.
Resistance.
Resistance. Look at that. Black, white, resistance. Black, white, black, support. White, black, resistance. Black, black, broke through that resistance.
Mm-hmm.
Y'all getting it now, right?
Mhm.
Yeah.
So that's how we're able to identify our support levels, right? This is where we want to buy from. Anytime we're in a uptrend, and the higher the time frame you go, the more valid that level is, or what we call high probability levels. This is where you can find your money at, right? These are our money zones. This is what we call right here. Anytime we draw like this, these are called money zones. Our end zones. Once, in this case, once sellers come to this level, I wonder if, right here, I wonder if these same buyers could come in over here. I wanted the same people that was present right here to drive price back up. I wonder if they are here again in this area once we do interactions. I wonder. And guess what we do from that point? We execute. We hop into that trade. And
When
guess
you're going a high trend, could you still have resistance?
Yep.
Okay.
See, in the uptrend, that's what we call it, an uptrend.
Mm-hmm.
In the uptrend, so this is our higher high point right here,
Mm-hmm.
right? That's how far price went up before we saw it drop back down. So guess what? This is called a what?
The seller?
And also known as, you know, Talia.
What part are you? Are you talking about this white line?
Yeah, this white line.
Yeah.
What's that called?
A trend line.
Resistance.
Oh,
Oh, see, I was like,
I'm over here looking at my notes like,
I know.
So a ceiling, or also known as resistance.
Okay.
Okay, so
Guess what?
ceiling is
Guess
resistance for
guess what price had to do before it gets to this level of resistance?
drop.
You got to break these levels of resistance first.
Oh.
How we expect to get up here if we can't even break these levels?
Mm-hmm.
Right? So yeah, in the uptrend, we're gonna have a short-term downtrend. Price got to create higher low points. It has to. This is your last higher low point right here, right? As long as this is maintained, we could see price continue to what? Bounce off that level and push higher. And that's all we base trading off of. Once price come to these levels, these ceilings, I'm sorry, floors or ceilings, once it come back to these levels, we have already identified it. We understand these are high probability areas. Now we're going to use proper risk management. We're not going to bet it all, right? This is not gambling. But what we're going to do is utilize proper risk management, calculate our risk. We don't know if price can do the same thing what it did in the future. But in order to test out our theory, put a little bit in, right? Risk 1% of your account. You got $100 in your account. I'm pretty sure you can risk $5 to see if it can play out right. $5? Okay, cool. Anywhere from 1% to 5%, no more than 5%. If it doesn't reach this point, okay, cool. We have something called a stop loss. If price comes below this area, right? If it comes below this area, we're going to make this red because that is what we call the danger zone. If it reaches beyond that point, our stop loss, which is our safety net, is going to take us out of that trade to protect our accounts. Our stop loss is our safety net to make sure that our accounts are protected.
So that's to make sure that it does not wipe out what you have.
Exactly.
Okay.
You know, you may be out at the grocery store, you might be out taking a walk, you might be out at church, right? You might be out living your everyday life, not paying attention to the markets. So to make sure, because listen, personally, I'm not trying to look at the charts 24/7, be in front of this computer all day, every day, all day, every day. Y'all don't have time for that, and I definitely don't have time for that. So we have our parameters set just in case it doesn't go into our direction. It will automatically take us out of that trade. Once we have calculated our risk, accepted our risk, and understand, okay, cool, this is how much we could gain, potentially gain, we go about our day. And that's the game. We trade in between this level of support and this level of resistance. This is where we could buy from, buy low, right? Talia, if you were selling your herbs, right? Or any type of products that you're selling, I'm pretty sure you want to sell it at a high price, right?
Mm-hmm.
But if you was buying it, you would buy it at a low price, right?
Mm-hmm.
Yep.
It's the same concept.
Okay, okay.
Buy low, sell high. We're not buying up here. You wrong if you buying up here. Because guess what? You facing all this right here. You down bad. God forbid you don't know what you're doing and you use the wrong lot size and you're not ready for those consequences.
Mm-hmm.
Imagine volume, right? Just going over this real quick. Your volume is 1.00. 1.00. That equals, hold up. That equals $10 per pip. So pips are measured based off the market's going up or down, and the market's going up. So imagine right now you're down 104 pips. Do you know how much you're down in terms of money on a 10 lot order? Oh, I'm sorry, not 10, or 1.00 standard lot or a dollar order?
104 pips. That sound like $1,000 something dollars.
$1,020. Exactly.
Oh my goodness. We starting low, Danielle.
Either 10,
Girl, who you telling it? So my question is, can you go negative?
yes, you can.
And then if you go negative, do you have to give that money back?
That, that's coming out of your account.
Wow.
The money that you loaded into your account, right? Initially invested, let's say you put $100 in,
Uh-huh.
or let's say you put in $1,000 in, right?
Mm-hmm.
And you put in a 10 lot order, and you down 100 pips. Guess what just happened to your money?
Jeez. Oh Lord, the typing.
You just gave it to the broker.
But that's why the stop loss is so important to
That's why
set, right?
stop
Mhm.
loss is so important to set. And not only that, but in understanding the lot sizes that you're going to be using in order to align with your risk.
Makes sense.
If you're saying that you only, want to risk $10, right, of that $1,000, you probably only use a 0.01. That equals 10 cents per pip. So the market went against you, right? 100 pips, how much are you down? 10 cent times 100.
What's that, like $10?
$10. You only down $10.
Okay.
That's 1% of $1,000.
Mm.
And guess what? That aligns with your risk management. You can afford to lose $10 on a $1,000 account, right?
Yeah.
Mhm.
That's not as substantial as being down $1,000. No, your money gone.
That's crazy.
No, you like, dang, Forex is a scam, man. This thing took all my money. No, you just didn't understand how to utilize your lot sizes and to calculate your risk. So this is why it's important not only be on these calls to learn these concepts, but also starting out on a demo account. So
Mm-hmm.
you can navigate through the application, right? You can navigate through the platforms. You can utilize these numbers to see, okay, if I use a standard lot on this side of the account, how does those numbers look fluctuating? Oh no, I don't want to do that on my real account. Let me use this lower lot size. Okay, cool. I see this how it fluctuates. I'm more comfortable once I do go live. That's why it's important to use a demo account.
Mm-hmm.
To learn in that process. Now, once you build that consistency, you build that confidence, then that's when you can go ahead and transition over to your live account. Until then, hey, you better stay on that demo. You better stay on that demo.
Keviron is like, I'm not playing with y'all.
Trying to tell you. But yeah, with that being said, that all that makes sense.
It made sense, but I need to go back and review some of this so I can, so it really, really, really makes sense. But for the most part, it does. And just following the trends and in black and white, and it's telling you how to maneuver through and showing, if it's white, the white and the black, then there's resistance. If it's white and black is support. I think that's where my note. Give me
If
one
it's
second.
white and black, that is support. If it's black and white, that is resistance.
Yeah, okay, perfect. I just
In,
corrected my note.
in terms of how my charts are set up. Now, on your chart, it might be, let's say, green and red. That
It
represents
depends on the color we chose, right?
exactly.
Okay.
The preset is green and red.
Okay. Thanks.
But yeah, with that being said, anybody got any questions?
I'm glad
Not for right now.
I'm glad this was a small training.
Yes, child. Look here. It's fried and it's laying to the side right now. No, thank you so much for this and for taking, the time to go through it and having patience for our questions.
Now,
Yes.
most definitely in next session, y'all have homework.
Okay.
Okay.
I did record this video, so y'all can. I'm gonna release it and put it on YouTube.
Awesome.
And I'm gonna put it in the group. Now,
Perfect. I can go while I'm on the road trip.
yep, the homework is to go back through this video. Then once you go back through the video, apply it on your own charts. I believe Kavessa, I think her next session with y'all is to set up. Here she is.
Okay.
Is to set up your, this is called Trading View. So Trading View is used to analyze the markets, and sway charts is to, you can analyze on here, but also you can execute your trades as well. So with that being said, once y'all set up on TradingView, y'all homework is to identify support in number one, identify your trend. All right. Then what I want y'all to do from there, once you understand, okay, cool, this is an uptrend. Now, this is my lower low point. This is my higher high point. This is my higher low. This is my higher high. This is my higher low. And this is my higher high. All right. So that's part one. Part two, what are my support and resistance levels? This is support. This is resistance.
So number 2 is where are my support levels?
Yep. Support and resistance. Well, no. Okay, let me start over. Number one is to identify the trend. So are you uptrend or are you in a downtrend? Step two, what are my structure points in that trend? So is it higher highs, higher lows, or is it lower lows or lower highs? Number three, where's my support and resistance levels? Identifying that. This is my level of support, my floor. This is my ceiling. This is, in this case right here, this is my floor. This is my ceiling. Here again, this is my floor. This is the ceiling. And then, yeah, we just, boom, ceiling, floor, ceiling, floor, potential floor, and yeah. But yeah, identify support and resistance levels and areas where you could, yeah, that's it. Don't worry about that last part. All right, y'all got it?
All right, thank you. Yeah.
So to make sure we're clear, go ahead and tell me what y'all homework is.
To identify the trend up or down,
Okay?
to identify the support,
And resistance,
and resistance,
and the floor and ceiling, and the higher highs, higher lows, and the lower highs and lower low points.
Okay. Yeah, it was kind of out of order, but hey, that was it.
Oh. It's all gonna be on the same chart, Keviron.
But y'all got it though. Anything you want to say, Kavessa, before we adjourn this meeting?
I did have a question.
What's up?
What time frame did you want us to have that chart in? Is this a week? Is this a day? Is this 4 hours?
So let me give y'all an example real quick. So on the higher time frames, this is where you're going to identify your trend. So you can be like, okay, cool, right here. This is a uptrend. Well, why is it an uptrend, Keviron? Because we created support right here. Created a higher high because this level right here was our last lower high, right? Because this was a downtrend. So this will be considered a higher high. Then price came here. That will be considered a what?
Higher low.
higher low,
Higher low. And then price rallied, then created a what right here?
higher high.
Higher high. And whoa, what was this right here?
It's a trend line.
Nope.
Um, resistance.
Resistance.
Oh, okay.
Woo-hoo!
I was gonna
Wait,
say that, but then I was like, are you still on the high and highs? So I'm like, I'm confused.
right, yeah. Wait, can you explain how that became resistance?
So right here we had black and then we had white.
Oh, okay. See, I was thinking, never mind. Okay, got it. I wasn't looking at the colors, I was just looking at the point. So got it. Okay.
So that was resistance. Then we came back down, right? And what we created?
A lower low or higher.
Higher low. Then we went back up, right? And created a what?
A higher high.
Higher high.
With
Right?
resistance.
With resistance. Exactly. Now from here, once we identify, okay, cool, we in uptrend number 1. These are our points in structure. Number 2. Number 3, this is support, 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 support. This was resistance. Then we have resistance here. Then we have resistance here. And then we have resistance here.
Mm.
And I'm gonna give y'all one more example. You remember how I was saying, in order to understand what potentially happened in the future, you gotta understand what happened in the past?
Mm-hmm.
Look at this. Like clockwork, y'all. This was an old level where price maintained, established that level, and then did what?
Downtrend.
Downtrend.
It dropped,
Mm-hmm.
right? So in the future, when it came back to this level, buyers, when it came back to that level, what happened?
Sellers.
Came back in. And guess what we could have been doing right there?
Buy.
You sure?
Selling.
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 Downtrend.
Mm-hmm.
Exactly. Because where do we want to be selling from?
The top.
Selling from downtrend.
Yeah, but where do we want to be selling from?
Higher highs.
Yeah, but where do we want to sell from?
Ceiling.
From the ceiling, but from
Resistance.
what? From what points? From high points, right?
Lower highs?
High points. We want to sell high.
Yeah, you said
Yeah.
buy low, sell high.
We don't want to buy up here. Why? Because
it hit the ceiling.
exactly. There we go. That's what I'm looking for.
Okay. Well, child, I got some studying to do, Bubby.
No, but I'm gonna help you. That's what
Yeah,
I'm
no,
for.
I'm saying it's good, but I'm just saying, like, yeah, and I like the terms for you to get it, like, you hitting the ceiling. Yeah.
Mhm.
Yes, I like
Your
it.
ceiling, your floor. Ceiling is, what is your ceiling?
That's
What is the word for it? That's right.
Yeah.
And what is your floor is your what?
Support.
Support.
Okay.
There we go.
And when we're in an uptrend, what are we looking for?
To buy.
To purchase. Yeah.
We're looking to buy, but what does it make?
What was that last part you said? What is it? What?
What is it making? It's showing right now. What is it making? It's making higher what?
Highs.
Higher highs.
And higher.
Low.
Exactly. Higher highs and higher lows. And then when we're on a downtrend, what is it doing?
Making lower highs and lower lows.
Exactly. Yeah.
Got it.